Welcome back to Property Unlocked, the first time investor's key to everything property investment. I've brought back our best friend Tiffany today.
Hi!
And you guys are going to love this episode because we are going to tell you exactly where to buy. There's no fluffing around. We're giving you the exact suburbs, all the information, so take it or leave it.
Yeah, no BS at all whatsoever.
No guessing games. We're giving you the postcodes. Now, Tiff and I, we're both based in Melbourne. We are buyer agents in Melbourne. So we know exactly what is happening on the ground. It's very clear to us that interest levels in Melbourne have really picked up over the past 3 months. I will say a lot of it is from, yes, we are seeing home buyers re-enter the Melbourne market with more confidence, which is great. We want people to be out there buying their homes. Awesome. However, there is a lot of interest from Sydney investors.
Yes.
Yeah.
Oh my God. I think the selling agents I've been speaking to in the areas at the moment, they're telling me that they're now getting calls from unknown buyers agents these days. And I'm just like, what? There's a lot of interest that's coming from interstate investors, interstate buyers agents. Yep. So the market in Melbourne, I would say, is a hot topic at the moment. So, yeah.
And it's wild to think that, there is still a fair bit of negative sentiment around land tax. People think rental yields in Melbourne are quite low. They're not that low. Where we're buying, yields are over 4%, which is pretty healthy.
Yeah.
And that's actually better than Brisbane.
Yeah.
It's definitely better than Sydney.
Yeah.
So we're seeing a lot of interstate investors now look at Melbourne as the affordable option, and where rental yields, you're not cash flow positive. Yeah. You're not even neutral. You're negatively geared, but it's still a healthy yield when comparing it to, their hometown.
Exactly. And it's it's one of the, if you can get into a capital city market that's well established like Melbourne for what, 600-700K? Honestly, you should start thinking about it.
I agree. And that's what we're talking about today, that bracket of, 650 to 700. I've got a client and he asked me this week, Ella, what about Queensland? We know Queensland has been growing. Yes, you should have bought there 4 years ago.
Yeah.
Even 1 year ago, you would have been getting in at a good time and seeing good growth. But now, mid-2025, should you be spending $700,000 in Gladstone or Bundaberg? No.
No, I wouldn't recommend that either.
No, that budget affords a capital city being Melbourne. So let's get into it and let's discuss that price bracket.
Let's do this.
So a lot of our clients, they have that budget, $700,000. They're looking for a rental yield of around 4% plus.
Yep.
And you can buy a property. Now, are you getting a 4-bedroom, 2-bathroom house for $700,000? No. You have to be open to the 3-bedroom, 1-bathroom. And that is fine. You're still going to have strong capital growth. If anything, you're buying a property that's on a really solid block of land. So you have that future development potential.
Yeah.
So let's get into these suburbs. Let's begin by talking about West Meadows. We've been actively buying in that suburb for 6 months now.
Yeah.
And we're actually buying there for as little as $650,000.
We're able to achieve this because of the relationships we've built early on.
Yep. Now, the median house price in West Meadows is $705,000. So still somewhat affordable if you're comparing it to the suburbs that are just a few kilometres south. Gladstone Park.
Yeah.
Look at, Pascoval, even Glenroy.
Yeah.
You need at least $850,000.
Oh, yeah. The prices in those areas are soaring. I think when I looked into, particularly in Glenroy, for example, you could have gotten a home for 700 something back in the day. But now, seeing the auction results, still blows my mind as well.
Yeah, agreed. Another thing I like about West Meadows is the fact that it's mostly owner-occupied. You have a very small number of renters. 26% of households are rented there.
That's so good.
It's great. It's good because when an area has more owner-occupiers, you know that, number one, they have a home loan.
Yeah.
they're not selling their house
Yep.
because of mortgage stress.
Yes.
Okay, whereas an investor is more likely to sell due to mortgage stress.
Yes.
So it creates a more resilient market when it's all owner-occupied.
Yeah.
And also, they're going to maintain the streets better.
Yes.
When a house is lived in by the owner, out on the Saturday, they're out mowing their lawn, they're doing their landscaping. Renters are less likely to put time and effort into those things.
Yes.
Like, I'm very happy
Melbourne,
with that.
so good.
Yeah, agreed. And let's talk about the stock on market. There is not much stock available,
Yeah.
which makes finding property very difficult.
Tell us the figures.
0.4% stock on market.
Oh,
Yeah. So this
tight.
means when you're looking on realestate.com, there aren't many available.
yeah.
The ones that are available are going under offer. And, most commonly they are going straight to auction.
Exactly.
Yeah. So the north, full of auctions, a lot of underquoting. We definitely prioritize buying them off market.
Oh, 100%. But even if they're going to auction, we do our due diligence. Like, I think that's key
Yeah.
to set expectations right. Like,
Yeah.
I can understand there are buyers out there going to an auction because they think that house is achievable because it's within their price range that they advertise, right? But
150 grand under what's realistic.
I was going to say,
Yeah.
like, if you go to the sold section of it and you've been keeping an eye on a property that was going to auction, take a look at what they were selling. Yeah. Like, most commonly, you would expect to see north of 100 grand. So there's a lot of underquoting at the moment in the area.
Easily. Now, another thing I want to touch on with these 3 suburbs we're discussing,
Yes.
they are definitely in the more affordable bracket, 700 or less.
Yep.
So people think, okay, does this mean it's lower socioeconomic? The answer is it definitely can be in specific pockets, and West Meadows is one of those where you have pockets with more social
Yes.
housing, and that number is 5.9%. This is actually fine.
Yeah.
We like to see that number 8% or less. But of that 3 suburbs we're discussing, it is the highest. So as part of our due diligence, we check the pocket.
Yes.
We're checking the owner names
Yes.
in the street. And another thing that you can do is simply drive around and make note of those properties that are social housing. It doesn't mean that, the person in there is trashing the house. That's not it at all. A lot of the time it's a pensioner or it might be a
Yes.
single mum. But if you go past that house and you see a bunch of hard rubbish on the front yard
Yes.
and 5 cars parked out the front,
Yeah.
that is the type of neighbour that is going to drag down your property price
100%.
and hinder your selling
Yes.
campaign when you go to sell.
It's so important just to do, like, if you're in Melbourne looking to buy in Melbourne, I would highly recommend doing a drive-by in the areas.
Now, still, people have uncertainty around Melbourne, which is why I love to pull out this number. Go on CoreLogic, mapping the market, and actually see how these suburbs are performing
Yes.
over the past 3 months. So West Meadows has actually grown by 2.8% over the past 3 months.
Yep.
If we annualize that, it's 11% capital growth for the year, which is like no one expected that for Melbourne.
Yes.
Right? So I just want to put that out there to let people know these suburbs are actually already growing. They've entered their growth cycle. You're going to see very strong growth this year. It's not just plucked out of thin air.
Exactly. And we're already seeing that on the ground day to day as well. Like, we've been keeping an eye on what prices are selling for these days. And I remember seeing one particular home selling for way more than what I expected. Like, I would say over 100 grand more. I think it's crazy to see what
that
sort
house
of
in
prices.
Craigieburn that was in the news
God.
sold 150K over the price guide.
Oh my God.
Now, one thing that stood out to me, and I was actually quite surprised. So when it comes to Melbourne, there is a lot of stigma around the western suburbs. The west
Yes.
is definitely not best when you talk to anyone looking to buy a home. If anything, they'll stick to the east or the north. However, we're seeing pretty significant growth in the western suburbs.
Yep.
And I've picked Deer Park as number one.
Okay. Yes.
So Deer Park, you're getting in for under 700. The typical value of a property there is 680.
yeah.
So nice and affordable. But also Deer Park is on track to achieve 14.7%. So it's actually outperforming Westmeadows.
Right. Why do you think that is at the moment?
I think it's the affordability factor.
Yeah.
And we're seeing a lot of gentrification in the West.
Yep.
But also people are looking there because of the affordability.
Like there's a lot of people saying, you know, like if you buy in the most affordable pockets, it's likely going to grow. But they don't see like the renters or the vacancy rate side of things as well. So tell us more about what are those stats in Deer Park?
So in Deer Park, it actually has less social housing than Westmeadows.
Okay.
But it's interesting because it has a higher crime rate.
Okay.
So crime sits at 15 out of 100 red suburbs crime score, whereas Westmeadows is 13 out of 100.
Yep.
So slightly higher.
Yeah.
I think that sort of goes with the stigma of the West.
Yeah.
You know, a bit more crime.
Yeah.
But with that being said, the stock-on market is still very tight. So 0.76%, meaning you're not seeing many listings online.
Yeah.
And the ones that are there, they're going under contract or they're going to auction quite quickly.
Right.
Yeah.
Yeah. Like I know for us, we are not quite active in the West.
Yeah.
Because I believe the North has more potential as well.
And I believe it has more longevity. Like
Exactly.
I would feel more comfortable investing in the North and leaving it for 40 years.
Yeah. Yeah.
Right? Same with the East, but unfortunately you can't buy a house in the East for 700K.
No.
But back to the North, let's now discuss the suburb Lalor.
Yes.
So I really like Lalor because it is surrounded by those more premium suburbs.
Yeah.
For example, Bundoora.
Yep.
Here you have more universities.
Yep.
More
Lots of
schooling.
amenities as well.
Very good access to amenities. All your infrastructure is there.
Yeah.
And that's another thing. All these suburbs we've mentioned, they're all established areas.
Yes.
You're not buying a new house and land package.
Oh God.
Yeah. Oh,
let's not get into that.
Yeah, you're buying a house that was built in the 80s. It might need a tiny bit of renovation to bring it up to rental standard, but otherwise you've got all of your infrastructure already there.
Yeah.
Your amenities are there.
Yes.
So your livability is a lot higher than the fringe suburbs that are just new housing estates where they're still waiting for a train station after 5 years plus.
We can get more into details into that later on.
Yeah. Now let's discuss how quickly these houses are selling.
Yeah.
In Lalor, houses are selling in 43 days.
Okay. Nice.
It's not bad at all.
No.
The quickest is actually Westmeadows at 32 days.
Goes to show what sort of level of interest there is when we're comparing these suburbs as well.
Yep.
Westmeadows being the quickest.
Yep. We like to see that number. I would say like 60 is the absolute maximum we want to see that number at.
Yeah, agreed.
But at the moment in Melbourne, everything's selling in around 40 days.
Yeah.
So Westmeadows at 32, that's pretty impressive.
Yeah, that's pretty much above average than the Melbourne.
Yep.
Yeah.
And back to the stock on market, we like that number at 1%.
Yes.
So all of these suburbs, Deer Park is actually the highest. Lalor is at 0.66.
Okay, we like that.
Yeah, we like that. But each of these suburbs, it's tight. You've got tight stock,
Yeah.
which means it's really not easy to find property.
Yes, yes. Well, I think that's the thing. Like if we're finding that, you know, stock on market the days on market is getting quicker and quicker, vacancy rates are low, which means it's, you know, you've got the power to choose which renter you'd like.
Yeah.
And also it's just crazy to see these numbers going lower and lower in
Yeah.
Melbourne compared to what we were seeing previously as well.
Yep.
Like this is why I like being on the ground day to day, seeing this so that we can try and like advise our clients and set their expectations as well.
Yep.
So, yeah.
Yep, I agree. And to give people an indication of, you know, where to buy with the higher budget, like we're still sticking in those middle ring northern suburbs.
Yes.
Like if you have a budget of, let's say, $850,
Yeah.
look at Glenroy, look at Hadfield, look at Fawkner.
Yes.
You know, you go one suburb south, you're looking at $1 million suburbs.
Yes.
Whereas we just bought one in Fawkner for $740K,
Yeah.
already rented out.
Yep. And that was that was a very good buy in my opinion.
You can develop townhouses.
Yeah, and the condition of it as well, like, was really good as well. So yeah,
agreed.
No, that was a good buy. Yep. Not trying to toot our horn here, but like, you know.
Yeah, and then for someone with a budget of 900 plus,
yeah,
I would still look at those more inner northern suburbs. However, we're also actively buying out in the Ferntree Gully,
yes,
region.
Yeah.
Here with 900, you're getting that basic house, but you've got potential to develop 3+ townhouses.
Yes. And I think that with that budget, particularly in Ferntree Gully as well, like, you can get like a sizable land, like you mentioned, to develop. But it's also like you can get houses in very good condition, so you can just rent it out straight away.
Yeah.
And then you just hold on to it until you're ready to develop as well.
On that, I had a conversation with a client's accountant not long ago.
Yeah.
And, they're very numbers driven, and they were like, Ella, for this client who's got a very good budget, 800,000.
Yeah.
We want to see a brand new property so he can get those depreciation benefits. I was like, oh my God. I made it super clear. I was like, we're buying this property as an investment.
Yes.
Capital growth is our number one priority.
Yeah.
We want to buy in the best location possible for our budget.
Yes, correct.
It's as simple as that.
It's all about the location at the end of the day.
Yep.
Like the land appreciates, right? Buildings depreciate over time. So if your focus is to focus on new builds, yes, it can require low maintenance, but have you seen the quality of the builds these days?
I agree. And, they're low maintenance, but they're in these fringe suburbs.
Oh, my God.
That is the worst for investment. That brings us to, and we're just going to touch on it. I don't want to spend, too long berating these suburbs where people actually live.
No.
But, these suburbs like Beveridge, Thornhill Park.
Look, at the end of the day, it's based on someone's priority. If their priority is to live in a brand new suburb, tailored to their own specs, like, I love these tiles in the kitchen, etc. Sure. But from an investment point of view, what do you have to say for that?
Didn't your Uber say he was looking to buy Beveridge?
Oh my God. So I was talking to my Uber driver the other day, and he was telling me that he was looking to buy Beveridge as an investment.
Yeah.
Now, I was so ready to be like, why Beveridge? Like, trying to sort of talk him out of it. I didn't end up doing that because I wanted to hear him out as to why. And it's mainly because he's already got family up there. So he wants to essentially try and be closer to family eventually, but he's planning to maybe, rent it out in the first instance.
Yep.
So I guess at the end of the day, people have different priorities, but from my point of view, $700K in Beveridge, not for me.
Not for me either.
No. But and this is the thing, right? Like, a lot of people, people are attracted to these agents saying, oh, you get a brand new home, etc. But there's so much land out there to be developed as well.
That's the issue.
Yeah.
With all this surrounding land, it's all zoned residential.
Yes.
So that there are thousands more houses in the pipeline.
Yeah.
This is going to compete with your Beveridge house from a sales perspective.
Yep.
Because when you sell your house, there are 1,000 more houses to compete with in the market. But also from a rental perspective, like if you buy your Beveridge house and it's 10 years old and you want to rent it out for $500, why would anyone rent out your house when they can rent the newer house just down the road?
Yeah. Yeah.
So it honestly makes, from an investment point of view, it doesn't make a lot of sense.
No.
You'll get your depreciation benefits.
Yeah.
That's it.
Well, that's the thing. I think when you're paying that amount, you're capitalizing more on the build, which we know depreciates over time.
Correct.
So
you want to be putting your money in the land.
yes,
It's the land that appreciates in value.
especially in high density areas like Melbourne as well, where I would say it's super important, but also depends on your budget as well.
But that's why we are talking about this.
Yeah.
A lot of, us first-time investors, we don't have $1 million budgets.
No, not at all.
I would say
Yeah.
700,000 is a really strong budget for a first-time investor.
Yeah.
So you want to make sure that they're actually, on our way here, we drove past the complex where I nearly bought my first investment property. I nearly spent $700,000 on a 2-bedroom apartment in South Bank.
Oh my God.
Are you kidding me? I can't believe that.
I do love the amenities there. Don't get me wrong.
Yeah, nice swimming pool.
But
I think they had an indoor golf simulator.
oh my God. I was going to say $700,000 on an apartment that incurs body corporate that adds up year on year versus $700,000 on a house on land as well.
Yep. Honestly, the house and beverage, I would buy that before I buy the South Bank apartment.
That's true.
So,
but at the same time, you can do so much more better than beverage.
yeah. And
Put it
that's
that
why
way.
we're discussing this. Look at those middle ring suburbs.
Yeah.
They're a little further out. Look at West Meadows.
Yeah.
Look at Broadmeadows. I'd rather buy in Broadmeadows than an apartment in South Bank.
Exactly. And this is the thing, right? I feel there's a lot of people out there with the, idea that needs to be brand new because of low maintenance costs, right? But from an investment point of view, you're going to sacrifice the location of that because a lot of the new builds that are happening is in areas where there's so much land supply.
Yeah.
And there's going to be more houses to be built as well, which means when you're trying to sell the home, there's just not a lot of competition for it.
Agreed. So the point is, with your budget, buy in the best location possible.
Yep.
As a general rule of thumb, stick to the capital city.
Yeah.
Don't go out to regional cities if your budget can afford the capital city like Melbourne.
Yes. 100%.
And get yourself a solid asset. No house and land, no apartments. Get yourself a solid house on a solid block of land. It's that simple.
Yes. You tell him.
You tell him. Thanks, Tiff, for coming on again with me today.
Of course. My pleasure.
We hope those listeners got a few tips and nuggets out of this one on where to buy your first investment properties.
Yes.
And if you want to reach out to Tiffany or myself, you can find our social medias online, Instagram. I'm Ella Cass. What's your Instagram?
Tiff Invest.
Tiff Invest. Reach out to us and we'll discuss buying your first investment property.
Brilliant. Thanks for having me
guys.
on.
Thanks, Tiff.